Hello and welcome to the Westbic Enterprising Podcast, where we're on a mission to empower aspiring entrepreneurs with knowledge and insights to fuel their journey to success. My name is Padraig Considine and I'm your host for today. Today we will speak about business insights for entrepreneurs, where we break down key business concepts to help entrepreneurs succeed in their business ventures. In today's episode, we'll be diving into essential information that every entrepreneur should know prior to starting their business. I'm delighted to be joined here today by Padraig Considine from Professional Accounting Solutions. Padraig established Professional Accounting Solutions in 1993. He previously worked in the industry as both the credit controller and financial controller for a period of over 15 years. When the practice commenced, it concentrated on looking after the bookkeeping, taxation requirements of the smaller business and the self-employed. In 1995, Padraig established what has become a very successful training business, and over the years has delivered a wide range of training courses and mentoring supports on behalf of a number of organisations. You're very welcome today, Padraig, and thank you for joining us. So as we embark on today's episode, let's explore a fundamental question. What are the basic principles that entrepreneurs should be familiar with?
Okay, Neve. When we look at business, people tend to overcomplicate business. So what I tend to do is look at 5 or 6 basic things that any business person should be aware of, should be familiar with, and should be able to handle and answer the questions for themselves. And the key one, the first one, we would start would be customers. How sure are you that there's demand for what it is you offer? Because no customers means no business. Now, when you speak about starting a business to people that you know, and maybe even people that you're not so familiar with, they'll all give you this commitment that I'd be delighted to do business with you. However, up to 40% of those people never actually follow through. So how solid is the research that you've done in relation to establishing that you have a customer base? Now, when you take this, and if you're moving especially from a POE sector, you're used to doing what you're told. And basically what that means is you start on Monday, you finish on Friday, you take your lunch at 1 to 2, and in between you do as you're told. Now, being good at what you do is essential, but it doesn't guarantee success. So when you're looking at your customer and you're looking at your business in the same context, you have to assume that the customer was managing absolutely fine before you came along. Now you've arrived on the scene, but the actual customer base hasn't extended or increased just because you've arrived. So now you've got to be able to convince your customer that they should move from where they are to you. So the question is simple: why should they? So what you should be able to answer very clearly to the customer are the advantages of coming over to you as a customer. So what makes you better? And they have to be able to see that they're winning by making that change. So there needs to be a very concise and exact explanation from you as to why you're better, number one, and why there is an advantage in dealing with you, number two. So the first thing I would say to anyone contemplating starting in business, do your research and establish that you have a customer base. And be precise about exactly what it is you're selling and the advantages of dealing with you. Now, if a customer decides, yes, you know what, I think I might like to deal with you, there's the next key question that comes up, or the key principle that comes up, is price. How much are you going to charge for what it is you offer? Do you know what the competition charge for a similar product or service? What have you done to analyse this? Many new small businesses, they start their business with a context or with a pretext that I'm going to set my price at a low level, gain customer base, then move the price upwards. It's a flawed idea, because you're going to get yourself into financial difficulty if you set your price too low. And just remember 2 things about price. If you set your price too low, you stand to do lots of business and make no money. If you set your price too high, you stand to do very little business and still make no money. So your price needs to be looked at, analysed, and established that it's in the ballpark of what other people are charging for a similar service. The next thing that I would look at, and it's not really going to affect everyone, but those of you that are looking at having to have a location for your business. You need to be careful about this. When you're picking location, the first thing you look at is population or possible customer base around you. There's no point in having a beautiful location and no customer base, especially if clients have to call to you. Just remember, clients or customers predominantly are lazy. They like easy. Travelling any more than 10 to 12 miles to meet you is a challenge. So just make sure that you have a sufficient size of population to sustain the business that you're going to set up. The next thing about location, I would say, make sure it's accessible. Make sure you're easily found. And make sure there's good visibility, especially from a signage point of view. And a thing that's often underrated when people are picking a location, when people call, parking and availability of it. So just make sure you hit those key points when you're looking at your location. Now, there's another thing you should think about with location. There's an old saying in business, grow into your business location, not out of it. When we decided we're going to open a business and pick the location, you're going to spend money getting it ready to open. That's money that you don't recover very easily. So from that point of view, if you're going to spend money on a location, if the location is a little bit bigger than you need when you start, that's excellent. Grow into that business, don't grow out of it. So if you have a little bit of extra space at the outset, that means you have place and space to put in a piece of equipment, an extra desk, bring in an extra person, without any additional cost. And this is something you should consider when you're picking your location. Now, the next point that's very, very important in the overall scheme of things is volume. And volume is very, very closely linked to location. Every business is going to have to be able to build sustainability, create a livelihood for the owner. And you can't afford to have quiet weeks or quiet periods. And with that in mind, location and volume are tied in very closely together. You need to be able to conduct a certain level of business each week in order to give you a livelihood. Now, there's times you hear people talk and they'll tell you that business is not about money. I think that's a fool's paradise. Business is all about money. The one thing I've learned when I started, and even to today, if I don't have money and my business doesn't generate money, I have a problem. So this myth that you don't make money in the first year, it just doesn't sit well. I think the person that brought that saying, they probably had a rich parent or a rich someone who could bail them out if they were in trouble. So because of that, what I would say to you is, you need to look at your location and volume in the same breath and hope that the location will contribute to you being able to conduct the volume of business that you need to be able to do. And it's on a consistent basis. I find sometimes with new businesses, they go through a very busy week, followed by 2 quiet weeks, followed by a busy week. That's a problem, because the week that you're not busy, you're not making any money. And when we work for someone else, we love a quiet week because you still get paid, even though the week was quiet and easy. We can't afford quiet weeks when we work for ourselves. So volume and location are tied. Now, for those of you that don't have to pick location, you may have an online business. That's excellent. So volume is still important. Location is now irrelevant. And when you're picking things to point out about online, key things, your website or your online presence is your shop window. So the ability to have that as clear as is possible, to tell as much as you can about yourself, is vital. So clarity of photography is one of the key things that you need. And people will say, explain it very simply. Biggest online site that we have in Ireland at the moment is probably Dundee. And pick an example of you buying a car. You find the car and the year that you're looking for. Are you going to stop and look at a car that doesn't have a picture? Don't think so. Are you going to stop and look at a picture that's unclear? Don't think so. So if you're selling product online, clarity of photography is absolutely vital in the overall scheme of things. The next thing, website. Make sure it's very, very easy to navigate. Make it easy for the client to find their way around. We went through a phase going back a number of years ago where people were building their own websites, and not all of them were what they should be. What does that say about you? And the final thing, which I thought was very sweet when I was told, Padraig, make it easy for the person to pay you. Don't put obstacles in the way when it comes to payment. Now, how many times have you been on a website, lukewarm about what you're looking at? Decided, you know what, it's not that expensive, I'll buy it anyway. And then there's a little obstacle put in your way when it comes to payment. And what do? You leave it there. Thank you, and goodbye. So just be careful about the online and those 3 key rules. Now, the last point is a thing called timing. And again, it's often overlooked. When you look at starting your business, timing is absolutely vital from 2 points of view. The first one would be personal. Am I ready to be able to give this business the time it needs? Because the thing I've learned about business, it's a little bit greedier than you expect. So take 2 possibilities. The business is going absolutely as you hoped and maybe even better. So now you're going to spend more time with it to help it grow and to manage that. Or the other scenario, the business is not going as well as you would hope. Now you've got to spend more time to get it up to the level that you want. So from that point of view, those 2 things are very important when it comes to timing. The other aspect of timing is slightly different. It's seasonal. Is your business seasonal? Because most businesses are. Very few businesses that I know, very few trade 12 months in a row. So what you're going to have little peaks and valleys. So from a timing point of view, when you're looking to start your business, are you going to start the business as it's about to enter its peak season and hit the ground hard and fast? Or are you one of these people that maybe would like to start at a slower pace, ease your way in, start in a slightly lower, quieter period, and be ready for the peak season when it starts? Now, these are all decisions that you have to make. And there's no one can make these decisions for you, only yourself. And there's something you should understand about your business. Your business will succeed or fail because of the decisions that you make. So from that point of view, these pointers that we're talked about here, they should help.
Excellent. That provides our listeners with a highly enlightening discussion on the fundamental business principles that all entrepreneurs should be familiar with. It's evident that establishing a solid foundation based on these core principles is paramount for success in the competitive world of business. Right, Padraig, moving on to another important area for an entrepreneur, let's touch on another critical aspect that can often be daunting for new business owners: taxes. Navigating the tax landscape is crucial for any entrepreneur, yet it can be complex and overwhelming. So what tax considerations should entrepreneurs keep in mind when starting and running a business?
Okay, Niamh, with regards to tax, we've got a lot of different types of tax. So I'm just going to explain 2 key differences for the moment. First of all, income tax. Income tax is paid by sole traders. And the income tax year for a sole trader is the same as the calendar year, which is the 1st of January to the 31st of December. So that's a key date that the new business owner, if they're a sole trader, should understand. Taxes for the sole trader are paid usually around October time. And the biggest problem with tax for an awful lot of small businesses in particular is they don't make any provision for tax. Now, whether you're a corporation, as in a limited company, and a limited company will pay corporation tax at a rate of 12.5%. But when you set up a limited company, this tends to sometimes cause problems for the actual business person, because setting up a limited company is akin to having a child. You're bringing a new being into the world which will have its own tax identity. And sometimes I find that small business owners in particular, they have a major problem with getting this into their mind, that the actual entity called the company, which has its own tax identity, will pay corporation tax. Now, the promoter or the owner of the business, they do all the work. They generate all the sales. They generate all the income. But when they want to take money from the entity called the company, it has normally got to be done by way of director's salary, which is liable for POE and PRSI in the same way as if they were an employee. This in itself tends to cause problems for the owner. Example, The limited company, for example, is trading away quite nicely. And there's an amount of money in the business current account. And the owner decides, I need €5,000 for a particular reason. The problem, they can't take it out without it being liable for tax. And business owners have a problem with this because they see the money as being theirs when it's not. It's belonging to the child called the company. So those two things in particular cause problems for the limited company. Now, most small businesses, when they go into manufacture, they often tend to have to form a limited company to be able to avail of any grant aid. And many of the bigger multinationals that they deal with, they don't particularly want to deal with sole traders. They prefer to deal with entities, i.e. limited companies. So from that point of view, many small businesses, when they start, especially in the manufacturing sector, they have no choice but to set up the limited company. Now, that in itself is one area. The second area that I would say that might need to be looked at would be most small businesses that get involved with business to business. They will probably register for VAT from the outset. The advantage of that is they would be able to claim VAT back on their startup costs. But the downside is returns will have to be filed with revenue every 2 months. Now again, this is not a major issue, and maybe it's not a major issue for someone like me that's familiar with it. But I would advise anyone starting in business to sit down with their accountant and discuss this with them so that they know exactly what's required from an accounting point of view and from a recording point of view. Because very often, this is neglected. The whole emphasis is on getting the business up, getting it running it, promoting it, operating it, and paperwork is one of those things that is left at the very end. And I would say to you, if you're looking at starting, make yourself familiar with what your legal obligations are, both from a VAT and a tax point of view. Now, limited companies, as I said, pay tax at a rate of 12.5% on the profits earned. Sole traders, they will pay tax at 20% on their profits. However, the limited company, the promoter, who are normally directors, will have paid POAE and PRSI on the salaries that they extract from the company. And another area that a company promoter should look at and make themselves totally familiar with would be the whole area of civil service rates of travel and subsistence, so that they can establish what they can take out legally by way of expenses. Again, chatting with your accountants is no problem with that, but sometimes I find that us accountants, we sometimes tend to speak in a language that you don't understand, and you're too polite to ask us, what are we talking about? So have a clear understanding of what your obligations are, because if not, you'll run yourself into trouble with revenue.
Thank you for shedding light on those essential tax considerations for entrepreneurs. It's clear that navigating the tax landscape requires careful planning and attention to detail. For our listeners, understanding these aspects from the outset can help them build a solid foundation for their business ventures. Effective cash flow management is a problem that startups constantly face as they negotiate the difficulties of entrepreneurship. This becomes increasingly more important, especially during times of expansion or uncertainty. So let's dive into our next topic. How can startups manage cash flow effectively, especially during these challenging times, Padraig?
Okay. First of all, people need to understand exactly what cash flow is. Cash flow is the money being generated and running through the business. Now, you often come across these problems, especially with new businesses that are growing faster than they can finance. And that in itself, success can cause and bring its own problems. Cash flow management is absolutely key to developing and growing a business, because if a business has cash flow problems, in simple layman terms, it has run out of money. Now, if that happens, it's usually down to a combination of different things rather than one particular issue. So when I'm looking at cash flow, and before I get into it too deeply, the first question I will always ask, are you happy with the way you're pricing your product or service? When was the last time you analysed your pricing? And when I hear people telling me that the pricing is down to a formula that we have created, I get extremely nervous. When was the formula written? How many changes have taken place since that formula was written? So you have to question the formula. Is the person that wrote the formula in the first place even still with you? Formulas, like anything else, they need to be reviewed on a constant basis. And if a formula or formulas are the basis of your pricing model, then these need to be reviewed because situations constantly change within business. So that's the first pointer I would give just on cash flow management. Make sure that your base structure on pricing is solid, and make sure you're happy that you're retaining the margins that you thought you were, and check this on a regular basis. Because no matter how busy you are, if your pricing is off, the busier you get, the bigger your problem is going to become from a cash flow point of view. So this is the first and key thing I would say to you. Now, the next thing we look at then is, how on top of the business are you from a financial point of view? So when was the last time you reviewed the running costs of the business, especially if you're in growth mode? Because if you move into growth, you're going to move into increased running costs, and these need to be analysed to make sure that these costs are being passed on to the customer, i.e. your margin. So my question around that is, growth in itself is what we look for, it's what we strive for, it's what we go after, but it can kill the business stone dead if the pricing model isn't correct. Now, the next thing I would say to you is, when it comes to credit, most of us will tell you it's the business norm, it's something we have to give, we don't have a choice, our competitors are doing it, so we've got to follow. Okay, that's fine. There's no problem with that. The problem is, can you afford to give it? Just remember something about cash flow and credit. The more credit that you give, the more business you need, and the more money you need to operate that business. So it's one of those things that it burdens itself inside out and outside in. Credit means you need to give, if you need to give credit, I should say, then you need more money to operate the business. Do you have that facility in place? So this is something that you're going to have to review, because if you don't, you're going to just hit a brick wall. Maintaining constant or consistent sales levels of a particular kind and nature is one of the biggest challenges that a business will face. It's a huge challenge. So you have to look at growth. You have to look at it being consistent. You have to look at it being managed. You have to look at, if you have to give additional credit, how and where are you going to find the finance to do that? Now, there's a number of areas of looking at that, from increased banking facilities by way of overdraft or whatever the case may be. Maybe you may look at invoice discounting as a possibility. But all of these things cost money, and is the margin sufficient to carry these additional costs that are linked to your increased growth? So with that in mind, growth is what we want, but you need to manage it, and you need to look at the finance before you go after growth to see and establish where the finance that you require is going to come from. Because bear in mind, if you're giving credit, you're going to need increased finance.
Brilliant. The strategies you shared provide valuable insights into effectively managing cash flow, particularly in these challenging times. It's clear that adopting a proactive stance and harnessing technology can significantly aid startups in sustaining financial stability. For our audience, integrating these approaches could provide pivotal in their entrepreneurial journey. As our regular listeners will know, we have a closing tradition on this podcast where we finish off with a quick fire round. So, Padraig, let's dive straight in. Work from home or office?
For me,
Yeah.
it's got to be office.
Apple or Windows?
Windows.
Email or phone calls?
Phone calls.
Tea or coffee?
Old-fashioned tea.
Microsoft Teams or Zoom?
Always Zoom.
LinkedIn or Twitter?
LinkedIn.
Early bird or night owl?
Early bird and night owl for me, unfortunately.
Okay. Reading or podcasts?
Combination.
And then time blocking or winging it?
Winging it.
And then finally, more or less than 8 hours sleep?
Preferably more, but doesn't always happen.
Like us all. And that wraps up our discussion today. A huge thank you to our insightful guest, Padraig Considine, for sharing his expertise and invaluable insights. Your expertise has truly shed light on some crucial aspects, and we're incredibly grateful for your time and expertise. Listeners, we hope you found today's episode as enlightening as we did. Be sure to stay tuned for more engaging conversations and expert advice on enterprising. Until next time, keep dreaming big and taking bold steps on your entrepreneurial journey. Today's podcast took place in the PwC suite in Platform 94 here in Merview in Galway. Their new creative hub offers a state-of-the-art media production facility. I would advise anyone that is looking to use this facility. For further information, contact the team or you can email them on info@platform94.ie. Thank you again for coming on today, Padraig.
No problem. Delighted to help in any way that I can.
Thanks to all of our listeners. We will leave Padraig's contact details in the show notes if anyone wants to get in touch with him.
That's fine. Thank you very much.
Thank you all so much for listening. If you enjoyed this episode, please subscribe to be notified about future podcasts. Please feel free to get in touch with us on social media and let us know if you found this episode beneficial. You can find us at Westpick on Twitter, LinkedIn, Facebook and Instagram. If you would like to hear more about our available supports, please get in touch via our website www.westpick.ie, and of course stay tuned for our next podcast episode.